At the shilling getting a lot stronger, we see,
yes.
But we do know that it's the end of the month, importers in the market, there is quite a bit of dollar demand. Is it going to have any impact at all on the shilling?
Definitely it will have an impact, but not as previously seen, where the shilling went to as high of about 110, 117. But at this moment, you notice that the shilling has some good support from the central bank, which has been proven with regards to the intervention measures that they took that have helped stabilize the shilling for the last 2 to 3 weeks. You notice that it has actually somewhat remained stable. So it will not be affected too drastically, but it definitely will be affected.
Let's talk about inflationary pressures, because the figure is still exorbitantly high at over 18.9%. We do know that although there have been price caps on petrol prices are going to change, so there's going to be a bit of a pressure coming in there, and other kinds of inflationary pressures. Your views?
Well, you'd have to look at it from the point of view of that despite having price caps, you have to understand that sourcing the fuel is more or less on an open market that is that the market or prices also vary from time to time. And by the time you source and deliver and it's finally on the shores of Kenya, by the time now you get the fuel at the pump, there are certain elements involved and which have to be considered. One of the key things that also brings about high fuel prices is, you understand, there's a levy imposed by the government of Kenya as a form of taxation. The fuel levy fund accounts for a large percentage of that total pump price. So despite regulation being there capping the price of fuel, there are other intervening factors that will keep the price going up irrespective. And this has been the case that ever since the regulation was imposed, the price has gone further up as opposed to remaining gradual over a period of time.
We hear that authorities have now announced 2 investment banks to be their lead arrangers in a euro bond, and they're really out there to test the market because of what's happened in the volatility of the Kenyan markets and the volatility of the shilling. How do you think investors internationally are going to price Kenyan risk? How are they going to look at Kenya and say, this is what we're prepared to pay for this country?
Well, I would say that regarding first and foremost is Standard & Poor's rating of the company, of the country, and 2 are the factors on the ground. There have been major infrastructure projects which symbolizes growth, because no country would invest heavily in infrastructure if it's not looking at long-term planning and long-term growth. So that is a plus. 2 are the systems that have been put in place. So far, we've had to clean up house in terms of the judiciary, which has taken place. The reforms are actually ongoing and they've proved to be beneficial. One of the key glaring situations has been the political scene, which is yet to be properly put into place. And as you notice, we are going into an election year. Having that in place, you notice that some of the regulatory bodies with regards to investment, with regards to ensuring that physical policy is in place, have actually outdone themselves in terms of excelling the way they have the central bank, monetary policy committee. You find that CMA regulation of the stock exchange, the recent partnering with the FTSE, London Stock Exchange and Nairobi Stock Exchange. So those are some of the key things that will be looked at when you're weighing the pros and the cons. Yes, we may not get a sterling performance, but we are also not doing too poorly. So those are the things that will be looked at. And also having in mind that Europe has been going through crisis with what with the debt crisis in Greece, they would be looking at where can we be able to invest, that there's a potential for growth. And Africa throughout has shown that time and time again there's a potential for growth. Okay,
let's go to what's happening on the equity side of the market. We had some wonderful results coming through from CFC Stanbic, with profits after tax coming in at 58% higher. CFC Insurance, that stock is up 6.4% today. Any correlation there?
Well, you look at it that at the end of the day, most people realize that there is one thing that I've constantly said about of the would-be investor. Today's would-be investor is savvy. Information is flowing freely as opposed to limited, and you are able to make informed decisions. But also you notice that CFC, after it had to sell off one of the portions so that it again was restructured into various entities, irrespective of being under the parent company, has shown time and time again that they're able to adapt to the market. They're able to be innovative, which is one of the key things today going forward, looking at a company to invest. Innovation, proper management structure. I always emphasize on the element of management because it is that carries the day. You look at return on investment and you look at going forward. What is the strategy of the organization? Because gone are the days of waiting for the market that we are market leaders. Today, there's no element of market leaders. You could be a market leader today, tomorrow your market share is eroded just by not being innovative. So those are some of the things that are playing in favor of some of the companies that have been top performing at the stock exchange, and they're rewarded by how investors respond to those sentiments at the market by either buying or offloading.